Hey everyone, and welcome back to the channel where we dive deep into the fascinating world of how to borrow stocks and potential short squeeze candidates. Today, we're putting a unique spotlight on a name that recently popped up on our screens due to an astronomical cost to borrow fee, Global Interactive Technologies, Inc., trading under the ticker GITS. This isn't just a theoretical discussion, we're breaking down specific data points unique to GITS. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what exactly is GITS Global Interactive Technologies, Inc.? Should GITS logo/stock chart through its subsidiary GITS operates as a technology-focused platform company based in South Korea. They are primarily known for operating and developing Filing, a digital fan engagement platform designed to support online fan communities, content discovery and sharing, and user interaction. This places them squarely in the communication services sector, specifically within internet content and information. With a market cap of just $8 million, GITS is firmly in small cap territory. Looking at recent price action, GITS has shown some positive momentum. Today alone, it's up plus 6.83%. Over the last 5 days, it's seen a gain of plus 3.79%, and looking at the last 30 days, GITS is up an impressive plus 17.74%. Highlight price changes on chart. However, volume tells an interesting story. Today's volume was only 38,800 shares, which is significantly lower than its 30-day average volume of 1,341,886 shares, giving us a relative volume of 0x average. This means current trading interest is quite subdued compared to its usual activity. What is cost to borrow and why it matters? Before we dive into why GITS is on our radar, let's quickly explain what cost to borrow or CTB means. When investors want to short sell a stock, they first have to borrow shares. The cost to borrow is the annualized fee, expressed as a percentage that short sellers pay to lend those shares. It's essentially the interest rate on borrowed stock. A high cost to borrow rate signals one of two things: either there's extremely high demand from short sellers to bet against the stock, or, more commonly for our purposes, there's a very limited supply of shares available to borrow. When you see rates soaring well above 100%, it means the market for borrowing those specific shares is getting very tight. Why this stock is hard to borrow right now. Now, let's talk about GITS. Our screener flight Global Interactive Technologies Inc. because its annualized cost to borrow fee is an astonishing 932.3%. Emphasize number, maybe on screen that's right, over 900%. While we don't have data on CTB momentum or the exact shares currently available to borrow, a rate this high strongly suggests a significant scarcity of available shares. Compounding this, GITS has an estimated float of just 2.4 million shares. A small float means fewer shares are available for public trading, which can make it easier for a stock to experience sharp price movements, especially if demand suddenly shifts. Our internal composite squeeze score for GITS, which combines CTB level, momentum, borrow supply, float size, volume/price momentum, and technical setup, currently stands at 42.5 out of 100. This is a moderate score indicating some potential factors are in place, but certainly no guarantee. Squeeze mechanics explained. So, how does a short squeeze actually work? Imagine a short seller borrows shares of GITS and sells them, betting the price will fall. If the price instead starts to rise, they begin losing money. Not only that, but they are also paying the exorbitant 932.3% annualized cost to borrow fee every day they hold their short position. If the price continues to climb, and especially if the supply of shares available to borrow dries up, these short sellers might get squeezed. To cut their losses and stop paying those sky-high borrow fees, they are forced to buy back the shares they initially sold. This mandatory buying creates a surge in demand, which pushes the price even higher, trapping more short sellers and forcing them to cover, creating a cascade effect of short squeeze. It's important to remember, though, that a high cost to borrow does not guarantee a squeeze. It could also mean short sellers have extremely high conviction in their bearish thesis and are willing to pay a premium to maintain their position. Dilution risk check. A crucial factor to consider in any squeeze play is dilution risk. Dilution occurs when a company issues new shares, which increases the total number of shares outstanding and can reduce the value of existing shares. For GITS, our check found no recent diluted SEC filings such as SMINUS-1, SMINUS-3, or 424B in the last 90 days. This is a positive sign. Why does this matter? Even if a stock has a high cost to borrow, New share offerings can flood the market with supply, negating the scarcity that drives the squeeze. It also provides more shares for short sellers to borrow or cover with, lessening the pressure. So, the lack of recent dilution for Global Interactive Technologies Inc. removes one significant hurdle for any potential squeeze thesis. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For Global Interactive Technologies Inc., with its 932.3% CTB and an estimated float of 2.4 million shares, what should you be watching? The most immediate factor would be a significant and sustained increase in trading volume, ideally well above its 30-day average of 1.34 million shares. Remember, today's volume was only 38,800. A sudden spike in volume accompanied by strong positive price action could signal increasing interest. Keep an eye on the borrow rates. Any further increases would intensify the pressure on short sellers. Also, although we don't have current data, if information on shares available to borrow for GITS becomes public, a shrinking supply would be a major indicator. Global Interactive Technologies Inc. GITS presents an intriguing case study, with its remarkably high 932.3% cost to borrow fee and relatively small 2.4 million share float. While recent price action has been positive, current volume is low. This combination of factors places GITS on our radar as a hard-to-borrow stock, but remember, high borrow fees are just one piece of the puzzle and do not guarantee a short squeeze. Always conduct your own thorough due diligence. If you found this breakdown of GITS insightful, please hit that like button, subscribe for more deep dives into unique market situations, and let us know in the comments below what other stocks you'd like us to analyze next. Thanks for watching, and we'll see you in the next one.